Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Sologenic. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right-hand corner of this screen. Now, a lot of people were asking for another Sologenic update, and the videos are usually doing quite well, so people are interested in these updates, so I will keep providing them for you. As you can see right now, we are printing some sort of a double top pattern here. Now this is a bearish pattern, so you have your resistance over here, and you have your neckline all the way down here. As you can see, if I take a trend line and place it there, that's going to be your neckline. And if you start breaking through that neckline, you're going to have a target to the downside. Now, how do we measure that target? We take a trend line from the top all the way down to the neckline of the pattern, and then you place it from the neckline to the downside, and you have a target at 22 cents, which is roughly the 1.414 Fibonacci retracement level here at 21 or 22 cents. Actually, the 1.414 is sitting at 21 cents, but the target is at 22 cents, and we're taking a rough estimate at the nearest support level. As you can see, we have a Fibonacci retracement, same as we did in the last video. We have the swing high in April of this year, and we have the swing low in February of this year. The chart is from Gate.io, and as you can see, we made our wave down all the way to the second fib level here at 12 cents, and I did give you this level in one of the previous updates. I told you that this would be our capitulation target, and from there we had an incredible bounce all the way up to 42 cents. That's a 250% trade in less than a month, or actually a bit more than a month, but still, this is not too bad for a bear market and for a token that everyone deemed as dead. So I do think that we are potentially going to lose the 20 EMA. I do think we're going to lose the 55 EMA. And I do think we're going to come back down to the 1.414 at the very least. You do have the swing high here in August, and that could be the support level that we're looking for to land on, and that's very near the 1.414 Fibonacci level. So be on the lookout for that. If you are going to lose this level, then chances are you're going all the way down there, because there is a huge gap in between the 20 EMA and the 55 EMA, which is the yellow and the red line. And once that happens, that is kind of your precursor to a correction. Also, the gap in between the price action and the 20 EMA is quite large. And as you can see, once it was like that before, you saw a move all the way down to the 20, a nice bounce, and a V-shaped recovery. So I told you the 20 EMA would be a good buying opportunity if you can't wait to get into Sologenic. Personally, I wouldn't buy it off of the 20 right now, but if you did, you're up 46%, so I would say this is not a bad time to take some profits once again. But if you want to wait for a further move to the upside, well, you can wait for that. There is a resistance level above here at 44 cents. But personally, I wouldn't do that. I would simply take profits now and wait for another correction, because that is still coming. And as you can see, the RSI here is giving us a bearish divergence, an exaggerated bearish divergence, because we have the highs over here bouncing from a horizontal resistance level. However, here on the RSI, you're printing a lower high, and that is an exaggerated bearish divergence. The bulls are losing this team, and we are most definitely going to see a move below this swing low here at 30 cents. So we're probably going to go below 30 cents. That's just what I think. If we jump into the daily RSI here, what you could always do is you could take the support trend line here and just extend that. So this could be a nice level for us to land at. And we could do the same thing for that trend line as well. Even though we broke out of this symmetrical triangle pattern, the trend lines are still valid. So I would still look at those trend lines for entries. We obviously have the pink trend line here. We did see a very nice bounce from there, so keep an eye on that for future reference. You have your buy zone below, anywhere from 27.6 to 16 on the index. So those are great entry points. The last time we were there was back in September when we actually started the pump. and the pink trend line held perfectly October 1st. So all of these trend lines are important to have them on your chart. We can see a bounce from either one of them. So what I would do is I would simply have entries on every single bounce of these trend lines. So you come up here, you come down here, you buy off the yellow trend line, you buy off the second yellow trend line, and then you buy off of the pink trend line if you go that low. And if you see a capitulation in Bitcoin drops and you enter the oversold here, then that's where I would be buying the most amount of tokens, because the more oversold you are, the better it is to buy more, because you have less risk. The lower you are on the RSI, the less risk you have. Because right now, buying here at the index of 90, that's when you have the most risk. But if you're buying when the project has already pulled back, then the risk isn't nearly as big as it was. So what you could always do is you could set up a Fibonacci retracement with a target to the downside. So let's assume that this is our swing high here, the local high. We can take that local low that we printed October 19th, and we can take a look at the 1.618 target here. So that is approximately at 22 cents, exactly as the technical target from the double top pattern here. So that just gives you more confluence to the fact that we are going to retrace back to 22 cents at the very least. But keep in mind, if Bitcoin does drop to $14,000, I can see Sologenic going all the way back down here to 12 cents. That is very possible. It is still a low cap gem because it is below 100. Actually, I'm not sure if it's below $100 million of market cap right now, but around about $100 million is still a low cap gem, relatively speaking. So in that case, it can be very, very volatile, as you can see. So as soon as it pumps up, in the next couple of days, it can dump down even harder. So always be aware of that. But if I missed out anything important on the charts, please always let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join my Patreon. That is where I'm going to have all of my trade alerts, low cap gems. That's where you can send in your technical analysis requests, your video requests. I take a look at some projects, some project reviews, market sentiment analysis. So yeah, if you enjoy my content and you want more content, that's always a great time to and a great place for you to be at. But like I said, Sologenic is one of those projects that people just underestimate, and personally I'm not invested into it because I'm accumulating all of the higher cap altcoins at the moment. But if you're looking at Sologenic for the long term, I would simply buy after these dips here. I would buy off of support levels and not when we're pumping. That's just me. But yeah, that's pretty much it. Thank you all for watching, and I'm going to catch you in the next one. Goodbye and good night.